So the question is, KG, are there any down payment assistance program available for buyers? You bet you there are down payment assistance programs for buyers. So we're going to talk about it in a minute. Hey there, this is KG. I'm a realtor with Fairfax Realtor Agreement, where we help buyers to buy ready home and sellers to sell their houses. And we do this in the Maryland, DC, and Virginia region. So if you're looking to buy, sell, move, invest in real estate, contact us below. We'll take care of it. And don't forget to subscribe to the channel to get updates once we upload a new video. So we are in the new territory in the real estate, as in the market is not crazy hot anymore. So we can talk about types of down payment assistance program available for buyers in this market. They have always been there, but because the market was so strong, that was a seller's market, nobody wants to touch down payment assistance program. But now we can talk about it because we can touch it. Buyers can buy homes with programs available for first-time home buyers. So today I'm going to be talking to one of my lenders that do a lot of deals with down payment assistance program. You will talk about what they have available, the credit score requirement, the debt to income ratio, the home buyers program. I mean the home buyers classes that you have to take. So we are talking today with James with down payment assistance program for buyers. Let's do this.
Okay.
Good morning, good morning. Now we are talking about down payment assistance program with the market being so crazy. But now we can talk about down payment assistance program because buyers can now get down payment. Not that we don't have it before, but because the market was so crazy, we don't talk about it. But now we're back to normal or going back to normal market. So today we're talking about different type of down payment assistance program, and I'm talking to one of my lenders today about down payment assistance program that they have in their company and even for statewide, and we're going to dive down and see how we can help more buyers become home owners. So welcome, James. Can you introduce yourself?
Yes, thank you for the introduction. My name's James Adamson. I'm with Ameris Bank Mortgage. I've been with them for about 9 years. I've been in the business for over 35 years. So hence the gray in the hair.
And you've been in the market when it's up and down and down,
Yes.
every type of market you've been there.
Many times.
Many times. So what we're seeing right now is not the end of the world, right?
No, it is not. This is the mortgage industry is a roller coaster ride.
It's a roller coaster.
Up, it's down. So we're just happen to be on a downturn right now.
Okay. So before we actually talk about the different down payment assistance program, one of the things that people are like just hang up right now is interest rate. Interest rate is high. And I tell other people that when I first bought my house, like it's not even centuries ago, I was jumping for joy when it was 6%. But James, you've been in the business for over 35 years. You know where interest rates were double digit, right? Talk about that.
Yes, I've personally quoted in my 35 plus years of doing it 8% interest rates. If you bought a house in the 80s, they talk to your grandparents, they'll tell you their interest rate was anywhere from 12 to 15%. The rates that we've seen over since 2008 are not, I would call them not normal rates. The Fed stopped buying mortgage-backed securities in December, and as soon as that happened, you started to see the rates start to creep back up. Over that time period, I would say the average rate was around 6%, somewhere in the 6 range. So does that mean we won't go back down to 4 or 5 at some point? Yeah, that's a possibility, but I think it's more sticker shock right now for the consumer because they're so used to what rates have been since 2008 that, especially the younger generation, that's all they know.
Yeah.
But when you've been in the business as long as I have, you see the rates will jump all over the place. And again, there was a point where we were quoting 8-9% interest rates. So, that's a real, that those are possibilities that could happen. So to jump in the market right now is a good thing because, you know, the 6% might seem high, but if you average it over those 30 years, it's really not.
Yeah.
And there's always the option of refinancing down the road when and if they drop. So yeah, it's still a good time to purchase. It seems the market seems to be slowing down some, so I'm seeing the prices start to come down a little, and the competition isn't as stiff as it's been just
Yes.
months ago, 2 months
Yeah.
ago.
Yep. Yep. Mhm. Yeah. 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 So even when you talk about at one point you were doing loan for 8 or 9%, people were still buying, right?
Yes. Yeah, and that's one of the things with an increase in rate like we're seeing. When that happens, the house prices tend to follow and tend to go down some. So, I think that's why, you know, I think there was I read an article where in the really hot markets, the housing values have dropped 25%. And across the country, the values are dropping anywhere from 5 to 15%, depending on the market you're in.
Yes.
So that's expected when the rates go up,
Go up.
just because there's not as many people to buy
Mhm.
in those high price ranges. And, you know, it becomes, you know, it shifts from a seller's market to a buyer's market. And I think we're starting to see that now.
Yeah, yeah, and that is why now we can talk about down payment assistance program. I mean, 2020, 2021, as a listing agent, when I see any buyer comes in with a contract with down payment assistance program, it trash it because we have cash buyer, we have people that are
Yeah.
putting 20% down, but now we can talk about it. All right, right?
Yeah.
So James, let's talk about some of this down payment assistance program that your company work with specifically, and then others that is just general. All right, right?
Yes.
So we have a list, so we're just going to go through the list, and then what are the qualification and how anybody can qualify for it. So the first one we're talking about is Ameris Down Payment Grants Program. What is that?
Yeah, that is a new program we just came out with about 2 months ago. It's our own funds. It was a program we got approved with Fannie Mae and Freddie Mac.
Mhm.
It's conventional only,
Okay.
but it is up to 12,500 that can be used towards down payment and closing costs. The nice thing about that program is that it only counts the income of the individual that's on the loan.
On the loan.
So
Mhm.
the max income limit for, you know, like say Montgomery or PG or Frederick in that DC metro area, I believe is around $112,000. So if the borrower's income is below that, but they have a husband, let's say, that makes another 100, we're not going to count that 100 because they're not on the loan.
Okay.
So it's got that flexibility. It'll let us go to a 50 back ratio. The minimal credit score is 620.
Oh, wow. Okay.
Does have to go through LP or DU. We have to get an approval. The nice thing about this program is it's forgiven after 5 years. So each year that goes by, a percentage of it is forgiven. And once you get to the fifth year, then it's completely forgiven and the borrower doesn't have to pay it back.
Oh, okay, okay. So that 5 years, as long as they own the property, right? You have to be
Yes.
for 5 years. Okay. And you said the credit score is 620, minimum credit
Yeah.
score is 620. Okay. So with this program, you have to do conventional loan, right?
Yes.
Okay. And
And it's anywhere in the state, or anywhere, really anywhere along the East Coast, but
okay.
there's no, you know, specific geographical area. So we can use it pretty much just about anywhere in Maryland.
Okay. Perfect. 12,500. That's American. All right. So the second one is Federal Home Loan Program.
Yes, that is the FHLBs for short. Not a lot of lenders have that. You have to sign up for it. And in most cases, you have to be a bank or be sponsored by a bank. That program is very robust. It does have income limits, but you can use any type of financing, FHA, USDA, VA, conventional. There's no maximum DTIs. Um, the only requirement it has is it's income based.
It's income based.
So it's based on the area, the county that you're buying in, and the number of people that will be living in the house.
Okay.
So if you're a single mom, you have 3 kids, then it would be a higher income limit on that.
Okay.
But it's a great program. $7,500. That also is forgiven after 5 years.
Okay.
It has a component with it that allows you to, what's called it's for community first responders, community uh, employees like teachers. But the nice thing about it is like if you work for a school system and you're a bus driver,
Mhm.
you could still qualify for up to $10,000.
Oh, okay.
So as long as you work for a school and you deal with students, you qualify for the 10. And if you're a registered daycare provider and it's registered through the state, you could also qualify for $10,000.
Okay.
So like police departments, the hospitals, the same thing. If you're an intake person at a hospital, when a new patient comes in, if you're dealing with the patient, you qualify for the 10.
Okay.
Veterans get the 10,000 too. Um, it's and the 10,000 again is forgiven after 5 years. They don't have to pay it back. There's no monthly payment on the FHLB grant, and
Right.
also
Okay.
there's not one on the Maris down payment program. I should have mentioned that.
Yeah. Okay.
So neither programs have payments, and they're forgiven after 5 years.
Okay. Okay.
But it's that one. It's first come, first serve. So usually those funds pop up in January.
Okay.
Now, because of the market the way it is, they did release another batch of funds. So we have our money and the FHLB money. So theoretically,
Mhm.
we just closed a loan where the borrower got the 12,500 and got the 7,500 on top of that. So it was a total of $20,000 they got towards their down payment.
Wow, I was just gonna ask that. Can you use both program at the same time? Like you can use both program at the same time for the same for one property. Wow. Okay.
Yeah,
Okay. Okay. What is the credit score for FHLB?
there is no minimal credit score.
Oh wow. Okay.
Yes, we go down to a minimum of 580. So theoretically, you could use the FHLB loan with a 580 credit score.
Okay. Okay. But with that, you can only do FHA loan, right?
Yes, FHA.
Okay, so one thing that I forgot to ask about the other one, Mary's down payment, as well as this one, is do you have a requirement for home buyer education class, which I think is good.
The FHLB does, but it's a phone call.
Okay,
So once they get the contract, we submit their paperwork to FHLB. Once FHLB approves it, they just schedule, I think it's a 20-minute call,
okay,
and the counselor goes over the documents and then gets the certificate. So
okay,
it's pretty easy. The Ameris one follows the same classes that Fannie and Freddie offer.
yeah,
Those are free too. So it's an online class. They don't have to go to like some 8-hour class.
yeah. It's online class. I mean, I really think the class is actually good, especially for first-time home buyer.
Yeah,
Let them know what they're getting into. So before I go to the other program, both programs are just for first-time home buyer, or can you repeat buyer?
you can be a repeat buyer if you haven't owned a house in 3 years. So
3 years.
that's the definition. Yeah, you either have never owned a house or you haven't owned a house in 3 years.
Okay, so you cannot have a house in your name and use any of the program.
No.
Okay.
Now there's some of these programs that we're getting ready to go through, I believe these two do not offer that, but uh, if you are in a divorce situation and the spouse is getting the house and you're moving out, sometimes they'll let you use the program.
Okay.
But for FHLB and Ameris down payment programs, you have to either be a first-time home buyer or not owned a house in 3 years.
Okay, so let's say somebody is buying a house in the state of Maryland, but they want a house in Virginia or North Carolina, and it's not 3 years. Are they consider first-time home buyer in the state of Maryland?
No, they would not be a first-time home buyer.
So it's 3 years regardless of where
Right.
you own the house in the country. Okay. So let's go to the next one. Maryland Home Mortgage Program.
Okay, that one is, we do quite a bit of, all three of these we actually do quite a bit of, but the Maryland Mortgage Program is through the state of Maryland. It's got several different components. It's got a $6,000 assistance. It's got a 3% of the sales price assistance, 4% of the sales price assistance, and up to 5% of the sales price assistance. So you can get a decent chunk of money.
From there.
It also has a smart buy option for students where they can roll in up to $50,000 of their student loan debt into a second with the first, and get the $6,000 assistance. There's some stipulations on that. I would, if anyone's interested in that, they should give me a call and I can go over it with them. But that program sets its own interest rates. So in the past, it was usually higher than what the market was, but with shift in the market, it's become a pretty comparable program. So, you can get 5%, 4% assistance and not be that far off from what the normal interest rates are.
Okay.
There is a max DTI of 50% debt to income ratio. The minimal credit score for their programs are 640.
Okay.
Do have to pay all those loans back. So when you go to sell the house down the road, you will have to pay those loans back. Or if you refinance, again, that has to be included in the refinance amount and paid back.
So but they're silent second, right? You don't pay anything.
No, there's no monthly payment
There's no
during
monthly.
that time. Yeah.
Okay. So with the Maryland Mortgage Home Program, do you have to also take a home buyer class?
You do, but they will allow you to use the online classes.
Okay.
You're okay.
So the question is, can you use 3 of them together?
No, only one. Now, you can use theoretically, you could use, if it was conventional, you could use MMP, home, the FHLB, and our program. Yeah, the highest we've ever done, I think, is 5 DPAs on one loan.
5?
5, yeah. So, but when you get that many DPAs, part of that money starts to go more towards the down payment, which benefits the borrower because it's lowering its CLTV and it lowers their mortgage insurance and it may even get rid of it. But yeah, you could use those 3 together.
Okay, that's a possibility.
And if it's FHA, you could still use the MMP and FHLB together.
Okay.
Same with VA and USDA.
Okay. So let's talk about the 2 specific program for the county, different counties. There's one for Anne Arundel County Mortgage Assistance Program. What is that?
Yeah, that's for Anne Arundel County. That program is up to $20,000. Now I say up to because they're only going to give the borrower what they need. So if they're getting assistance from someplace else or, have more than enough funds in the bank, then they're not going to give them the whole 20.
Okay.
It does have a lower income requirement for that program. It does require counseling from ACDS. You can Google them and they'll pop up, and they're the ones that give the counseling classes for it. And it's only for first-time home buyers also.
Okay.
The property has to be in, of course, Anne Arundel County.
All Broward County.
my
Okay.
favorite.
Okay.
But with that one too, you can piggyback it with um, MMP and FHLB. But again, when you start using those others, they're going to back down on what they're going to give. So
Okay.
it's an okay program. The problems we have with it is that the borrower's incomes usually are too high for it.
Okay.
But there's still a chance. One thing we try to do is we'll look at everything that the borrower might be eligible for,
Yeah.
and then we'll give them the pros and cons of those programs.
Okay.
But we don't do a lot of them because most borrowers' incomes end up being too high.
Yeah. Yeah. And the houses are higher in Rowan County.
Yeah.
With your lower income. Okay. What is the credit score requirement for this one?
There is no minimal credit score for that one.
Oh, okay. Okay.
Yeah.
Let's talk about the one in Frederick County. Frederick County Home Buyer Assistance Program.
The Frederick County one is up to 8,000 if their income bracket falls into the 50% bracket, then they can get up to 10,000. The basic requirements, there really isn't any. It's whatever the lender's willing to do. That does require that the borrower either live or work in Frederick County to get the funds.
Oh, okay. Not just coming to buy.
Right. Like they couldn't come from Montgomery to Frederick and get the funds.
Oh, okay.
They would have to either live there or work there.
Oh, okay, okay, okay. So, but can
So,
also be used with if
yeah, can be used with other programs.
Mhm.
It's we've done a few of them too. The thing with all these programs is they're not an endless pot of money. MMP is the only one that is. So if you're a buyer and you're looking to buy, the sooner you do it or get ready to do it, the better. Because most of these funds come out different times of the year, and it's first come, first serve. Example, FHLB.
Mhm.
And it's those funds are not just for this state. Those funds are for the East Coast.
Okay.
So other people in other states are trying to get those funds too. So you can't be you've got to be proactive and move quickly when you're looking to buy if you want to use these type of products, because there's a chance they'll be gone by the time if you don't move
No, okay.
quickly.
Okay. So for MMP, I know they do have a special program for Montgomery County, right?
Yeah, it's attached with Montgomery County's program. Montgomery's got a couple programs. They've got the 5 for 5 assistance, up to 5% and of the sales price, and but it does have an interest rate, 5%, and you do have to make monthly payments on it.
Oh, okay.
The Montgomery, and there is another program that's attached with the MMP program. One thing that these counties do, I know Montgomery's big on it, and Howard County is too, is they will force the builders to set aside a certain number of properties to be sold at a discount. Basically, they're to be sold for lower income clients. It could be as much as 100 grand less. It depends on the properties and locations. So they can contact Montgomery County Housing or Prince George's County Housing or Howard County Housing and see if there's any communities that are available for that. They do have to apply and register and go through the process to be approved to be able to purchase one of those properties.
Oh, okay. I didn't know that. You said new construction.
Yeah, new construction. They require that, like, if it's a certain size development, they have to set aside a certain number of properties for that.
Okay, so
And you can still use the DPAs with that.
with that, okay. You
Yeah.
can still use DPA with that.
Yeah.
So you really are not tied to builders lender.
Yeah.
Okay. So we talk about Montgomery County, we talk about Randolph County. Is there any program in Prince George's County?
There is, it's called the Pathway to Purchase. It usually always has funds, and one of the reasons is that it does have some requirements in the past that made it hard to get sellers to accept. In other words, there's a home inspection portion of it that if this home inspector finds anything wrong with it, that those things have to be fixed. But with the market shifting and it becoming a buyer's market again, that product will probably become um, more suitable to use,
Right.
and the sellers might be willing to accept it.
Yeah, yeah. So with the pathway program, can you use that with your Ameris down payment system program as well?
Yes, you can, but it kind of acts like the Anne Arundel County one. They're only going to give you what you need,
Okay,
and it's up to 10,000.
okay. What about DC?
DC has made a significant change. They've taken their HPAP
Mhm.
second up to $200,000.
Wow,
Um,
$200,000.
yeah, so it's a significant amount now. And if you're a DC employee or work for a DC contractor, you could get another 25,000 on top of that.
Mm,
Um, and DC does have what's called the DC Open Doors,
mhm.
and that product's similar to MMP's Maryland Mortgage Program.
Okay,
So it's, you got to pay it back. It has higher interest rates, that type of stuff. But
okay.
yeah, that is we just closed one, the HPAP ones. As a borrower got at that time it was 80,000 and another 25,000 on top of that towards their down payment.
Mhm.
And DC also has a program called DC tax abatement. So that borrower qualified for that, and that's where they don't pay their transfer taxes. The sellers have the transfer taxes come back to the buyer as a credit, um, and the borrower is exempt from property taxes for 5 years.
Oh wow, that's big.
Yeah, we do a lot of DPA stuff. So
Yeah,
this
that's
is a
big. Oh
program.
wow, yeah.
uh,
Oh yeah. So that's remind me, is there any proprietary program for Baltimore City? Do they have their own program as well?
Baltimore City's got several, like DC does. They've got the trolley, the CDBG, the um, live near your work. They've got several programs too, and in fact, the one that we did had the five programs or DPAs was in Baltimore City,
Okay. Mhm.
because you could use theoretically their three and throw the FHLB in there and the MMP if you wanted, but it gets sometimes it doesn't make sense to do it because
Yeah,
it just the numbers don't add up, and it's that just doesn't um, uh, especially when you got to pay it back.
yeah,
Why add an MMP if you don't need it, and but you would have to pay it back
yeah,
when you've got the money in other DPA. So that's what we try to do when we go through all the different programs. Here's the pros, here's the cons. This is why we think you shouldn't do this or do that. Because it's when you're looking at buying a house, everybody wants to get everything they can, um, which the lenders should be telling them about. But we also have to look down the road because
down
this
the
could
road.
be a
Yeah.
problem, especially in this market, knowing the rates are six.
Mm.
By what we're doing, is it going to stop you from being able to refinance down the road? We don't want to put them in a situation where 3 years from now they can't do that. So that's all part of the pre-qual process and explaining it all to them.
Okay, that's good. That's good. I really like what you just said, that not only how much you can get now, which is enticing, but at the same time, you're looking down the road. If you want to refinance, what you get
Right.
now can actually hamper you from being able to refinance. So
Correct.
yeah, just get maximum, but not really maximum that you can get now. Yeah. Okay, that's where, talking to a lender that do a lot of DPA, and you can see, James, you guys do a lot of DPA over there.
Yes, we do.
Okay. We talk about Maryland. Is there any program in Virginia? So let me ask you, the Mary's proprietary program for you, can it be used in Virginia as well?
Yes, it can.
Okay.
DC and Virginia. The Virginia program is VHDA. That's the state, Virginia's version of Maryland mortgage program.
Non-mortgage program. Okay, so all the states have their own version of the
Yep.
program. Okay. Okay. So let's talk about this one. I want to talk about USDA program. USDA. What is USDA? Can people in Montgomery County or PG County actually use USDA?
They can on the outskirts, like Prince George's County, you're going to be in Accokeek. Kind of the rule of thumb is that I believe it's Route 301.
Okay.
If you're outside that, going towards Charles County,
Yeah.
usually the property will qualify. Nothing in Waldorf is going to qualify.
Not anymore.
Yeah, but the rest will.
Okay.
The rest of Charles County will.
Okay.
It's 100% financing. It's a good, the MI, the monthly MI is cheap. It's only 0.5%. And you can use these programs with it. You can use MMP, you can use the FHLB grant, you can use our grant, or not our grant because it's only conventional.
Yeah.
You can use the MMP, the FHLB programs with that, and literally walk in for nothing. Same with the VA.
Okay.
You can use those programs with VA too,
Okay.
and basically walk in for nothing.
Okay. So if you do USDA or VA, if you use any of the program, it will just reduce the principal, right? Since,
Yes.
okay.
Yeah. Yeah. We try not to leave any money on the table. If there's, if we can't use it towards any down payment or closing costs, then we're going to lower the loan amount accordingly. Yeah.
Okay. Ooh, there's a lot of down payment assistance program now. It's stunning. I mean, like I said earlier, we cannot talk about down payment assistance program this time last year, just get a contract with down payment assistance program, just trash it. But now we're talking about it. All right. James, is there any other program out there that you want to talk about?
Howard County has one too. They have 4 or 5 different versions of it. So theirs is up to, I believe, 25,000.
Okay.
It's which we're approved for too. So they do have a program.
Okay.
But I would also just say, I mean, with the housing prices going down and the rates, they're still creeping up. So the longer you wait, the higher that rate could get. It's unusual to have this much DPA funds available this time of the year. Usually they've depleted their funds. So it's kind of a unique situation for the borrowers in the sense that with the market shifting and becoming a buyer's market, with rates going up still, now might be the time to move because you still have all these DPA funds available. You have the prices shifting. You don't want to wait too long. The rates will continue to go up. The people that we pre-qualified 6 months ago are shocked at what we tell them they qualify for now.
But now,
If they had bought 6 months ago, it would have been a totally different story, better rate, better everything. So woulda, shoulda, coulda. You really want to, take advantage of the DPA, the lower prices, and the fact that these rates, they're not showing any signs of they're slowing down a little, but they're still creeping up.
yeah.
So, it's still a good time to buy. I think a lot of people are just shell shocked, but with all the things that are available to them, they should consider making a move.
Yeah, the joke always is if you're worried about the interest rate being 5, 6, 7%, if you're renting, you're paying 100% interest rate.
Yes.
You're paying
Yeah.
100% interest rate. Yeah. So, woo, thank you. So when Jim keeps saying DPA, it means down payment assistance program. We talk about acronym.
Yeah.
Down payment assistance program.
Yeah.
That's what because we have acronym that we know, but you don't know as a buyer.
Yeah.
All right. So thank you, James. Thank you. James, can you give your contact information? But of course, if you want, I will give it to anybody. You know me, right? So James, go ahead and give your contact information.
Appreciate that. James Adamson, cell phone number is 301-717-6272, and my email is james.adamson, ADAMSON, at Ameris, bank.com.
All right. Thank you so much. Thank you, guys. So we're talking about down payment assistance program, and it is here. Take advantage of it. You just heard what James said. It is time to do that. Don't wait. All right. Thank you, James.
Thanks.
So don't forget to buy, sell, invest in real estate. Contact us. We'll take care of you. If you need down payment assistance program, James is your man. We will take care of you. Contact us and we will connect you with James. And last but not the least, don't forget to subscribe to the channel to get updates once we upload a new video. Until then, until next time, happy buying, happy selling.